Texas housing markets have been on many homeowners' radar for a while now. In 2025, the state continued to see strong demand, fueled by record migration and population growth. Major metro areas and even smaller towns in Texas have been growing rapidly, pushing housing needs to all-time highs. Texas accounts for roughly 9% of the U.S. population, but led the nation in new home building permits in 2024, issuing about 15% of all permits nationwide. Indeed, nearly a quarter of the U.S.'s population increase over the last 5 years has been in Texas. In fact, the median listing price in Texas was about $360,000, roughly $40,000 below the national median. The U.S. Census Bureau's latest estimates confirm this. Southern and western cities grew fastest in 2024, and Princeton, Texas, a Dallas suburb, saw a 30.6% population jump in a single year. Texas's economy is diverse. Energy, tech, manufacturing, and even space and defense are big. For instance, an EU-US deal will see $750 billion of U.S. energy exports over the next few years, boosting jobs and housing demand. For example, in the Dallas-Fort Worth metro area, the median list price is around $440,000 as of mid-2025, which is well above the Texas average, illustrating how major city markets can be much pricier. As of late 2024, the median listing price in Texas was about $360,000, roughly $40,000 below the national median. Nearly half, 47.5%, of for-sale homes in Texas were priced at $350,000 or below, compared to around 40% nationally. That increase in affordable inventory helped improve affordability. For example, Texas added roughly 50,000 more homes listed under $350,000 in the last year than the year before. For perspective, a recent Realtor.com analysis found that Texans would need to earn about $99,000 a year to afford a median-priced home in 2025, versus the state's actual median household income of approximately $75,800. At the same time, builders continue to add homes. Texas has led the country in new home building permits, and since 2020, the share of new builds priced under $350,000 has increased. Most new construction is focused in booming metro areas, making up about 79% of new homes, mainly in Houston, Dallas-Fort Worth, San Antonio, and Austin. Texas's rapid growth also shows in building permits. For example, Harris County, Houston, added about 32,000 new housing units in 1 year, Travis County, Austin, about 22,000, and Collin County, DFW area, 18,000. As for renting, Texas saw over 92,000 new apartments delivered in 2024, yet landlords had to offer concessions due to ample supply, so rent growth remains mostly flat or even slightly negative. Before we proceed, it's important to note, this discussion is for informational purposes only and not personalized financial advice. We're not telling you to buy or sell. Always consult a qualified financial professional for your individual situation. With that said, we will look at various expert forecasts and data to build a practical picture of what the Texas market may do in 2026, without hype or speculation. We are not tax or legal advisors, so treat this as background information. National experts are projecting a modest improvement in 2026. The National Association of Realtors now expects existing home sales to climb about 14% next year, driven by slightly lower mortgage rates and stable jobs. UN and NAR say home prices will rise only about 4% nationwide, not declining under this scenario. The caveat is that rates, while likely easing, will remain historically high. Forecasts suggest mid-6% on average in 2026. Realtor.com's economic team similarly expects rates around 6.3% in 2026, well above the 4% historic norm, and home prices rising a further approximately 2.2% nationally. That forecast notes incomes may climb faster than inflation, so mortgage payments could dip below 30% of income for the first time since 2022. Danielle Hale at Realtor.com calls 2026 a welcome, if modest, step toward a healthier housing market. In fact, the Fed's September 2025 projections had core inflation falling to about 2.6% by the end of 2026, which would support these moderate rate and price forecasts. Even so, these forecasts emphasize caution and gradual gains. Buyers will see greatest affordability improvements in regions with robust new supply, particularly Houston. NAR specifically notes that Houston's abundant new homes should make prices much more reasonable over time. This slight improvement could translate into a few thousand more Texan buyers finding homes, especially as existing home listings have begun to tick up. State-level forecasts and research center reports are in similar, cautious tones. The Texas Real Estate Research Center at TAMU projects that in 2026, Texas single-family home sales will edge up about 2% to roughly 340,000 units. The center sees mortgage rates staying elevated but slowly easing, which should allow sales to strengthen modestly by mid-decade. Their forecasts suggest the Texas median home price may rise slightly to around $350,000, reflecting both steady demand and the price moderation we've seen after the pandemic surge. Single-family rents in Texas are expected to hold roughly flat at about $2,300 per month, while apartment rent growth remains soft. In short, these institutional forecasts emphasize neither a big crash nor runaway boom, but a slow return toward balanced conditions. It's worth noting building permits in Texas have already begun to decline. Texas is expected to issue about 47% fewer permits in 2025 than in 2022, which may limit how quickly new supply comes online. Underlying all of this are Texas's strong fundamentals. Notably, the Federal Reserve began cutting rates in late 2025. Mortgage rates have since drifted modestly downward, but many forecasts still expect them to stay above 6% through 2026 due to persistent inflation pressures. Texas added roughly 244,000 jobs in 2024, about 1.7% growth, even faster than the national rate. Job gains were broad-based, led by sectors like oil and gas, finance, and construction. For 2026, the Dallas Fed forecasts around 1.3% job growth, with unemployment holding roughly steady. Meanwhile, Texas personal incomes are projected to rise approximately 5% per year through 2026, outpacing inflation. In practical terms, that means many Texans may see raises that gradually improve their buying power, even as borrowing costs remain high. Major metro areas continue to add tens of thousands of jobs annually. Dallas alone added an estimated 40,000 to 50,000 jobs last year, and Houston expects tens of thousands more in 2025. It's worth noting regional differences. In 2024, El Paso saw 2.1% job growth, the highest among major metros, and smaller areas like Beaumont-Port Arthur grew even faster, showing Texas's growth isn't limited to the biggest cities. Statewide, the Texas Triangle, Houston, DFW, San Antonio, Austin, now accounts for about 79% of new housing supply, reflecting continued corporate relocations and population shifts. All of these factors suggest Texas will still attract buyers and renters next year, as long as the broader economy stays healthy. Of course, if a national recession hit, that would change things. But current projections assume solid growth, so Texas's fundamentals should keep demand up. It's worth noting that demand for Texas housing isn't purely local. The Lone Star State continues to attract people from across the U.S. and the globe. Texas is on pace to add over 10 million people by 2045, a bigger growth than any state, which would make it the nation's most populous. Many of those are drawn by jobs, lower taxes, and more affordable living. Even retirees say Texas is appealing. One recent survey found the median homebuyer is age 59, and the top reason for moving is the grandbaby effect, getting closer to family. For 55-plus households, this means Texas's demand base includes not only career moves, but also lifestyle moves. However, keep in mind that higher mortgage rates are motivating some would-be sellers to stay put. Owners with low-rate loans may delay selling if they have to trade up. So for a while, inventory may stay tighter than usual. On the flip side, corporate relocations continue adding to demand. For instance, major projects like Apple's new Houston campus and Tesla's Texas expansion will add thousands of jobs in coming years, likely keeping housing demand high. In summary, experts generally expect the Texas housing market in 2026 to remain relatively stable. Mortgage rates could fall a bit from 2025's highs, but likely remain in the mid-5% to low 6% range by year-end. Home price gains might slow or pause for a few quarters, then resume modest growth, especially in areas of strong job and population growth. None of the major forecasts predict a steep crash. Lawrence Yun of NAR emphatically said, home prices nationwide are in no danger of declining in 2026. Similarly, Realtor.com's chief economist Danielle Hale expects 2026 to be a welcome, if modest, step toward a healthier housing market. Also, local market data back this up. For example, Dallas area listings were up about 13% year-over-year in mid-2025, with a modest 1.7% dip in the median price. More inventory means more choices, a shift experts generally note but may not highlight in broad forecasts. All of these professional outlooks emphasize caution and slow gains, not dramatic swings. From the standpoint of a 55-plus homeowner, that means being patient, shopping smartly, and consulting financial and tax advisors before making big moves. Our final advice is grounded in these facts. Texas is a large, high-growth state with generally strong fundamentals, but markets can move unevenly. Pay attention to reliable local data. Things like inventory levels, days on market, and offer volumes can change quickly. Monitor mortgage rate trends. They influence both what you'll pay and how many buyers can qualify. For context, a $300,000 mortgage at 5.0% has a payment around $1,610 per month versus about $1,799 at 6.0%, roughly $189 more monthly, over $2,200 per year, which is significant on a fixed income. If you're buying, consider locking in a reasonable rate if you find one. If selling, set realistic expectations based on recent comparables. Also remember, Texas's property taxes are among the highest in the nation. The typical effective tax rate is around 1.6%, which adds significantly to your monthly costs. Be cautious about panicked predictions. Most experts don't foresee a Texas housing bubble just waiting to burst. In fact, some forecasts specifically suggest any price moves will be modest. For example, Comerica Bank projects prices may fall modestly in early 2026 and then rise again later as rates ease. Still, none of us has a crystal ball. Always consider worst-case scenarios. For instance, if inflation or global events keep rates higher than expected, affordability could tighten further. It's wise to use tools like the Texas Real Estate Research Center reports and National Association of Realtors data to run your own numbers. In short, stay informed and budget cautiously. Treat any major home transaction as part of your long-term financial plan. At the end of the day, the consensus is that Texas housing in 2026 will likely be flat to up, not a wild swing. Based on current indicators, a balanced market seems most probable. Keep in mind that unforeseen events can always change things, so don't rely on any single prediction. Texans have weathered housing cycles relatively well so far, thanks to solid fundamentals, so lean on that history. Stay tuned to expert commentary and local market reports. More broadly, remember that housing trends rarely change overnight. By late 2026, any adjustments will likely be incremental. If you're evaluating a buy or sell, watch monthly signals. If inventory ticks up and rates drift down, that could be a gentle sign of improving conditions. If neither happens quickly, then things will just remain steady. In either case, you'll have time to adapt. Housing markets move on a cycle of months and years, not weeks. That means a wise approach is to prepare for slightly different possible outcomes. For example, run your numbers assuming mortgage rates stay 6% or even rise slightly, and see if your budget still works. Likewise, consider that home prices could remain flat or rise by a few percent, not 10% or 20%. Plan your finances around these cautious scenarios. Finally, keep an eye on the same credible sources we've cited here. The Texas Real Estate Research Center, NAR's monthly data and large brokerage forecasts will update in early 2026. We'll watch those reports closely. Right now, they all point towards steady as she goes in Texas, which is probably not what internet hype feeds love to report. But for practical purposes, a steady market is far less risky than a boom and bust scenario. In summary, plan conservatively. If experts aren't shouting headlines, it's often because the outcome is expected to be modest. To reiterate, this analysis is based on the best information available now, drawn from credible publications. None of our sources suggest any major surprises ahead. They simply point to more of the same steady trends. If you find news that seems to contradict this picture, check it against data from sources like the Dallas Fed, Texas Real Estate Center, or the Census. Otherwise, proceed with informed patience.